everyone, in this episode we'll be talking about what will Australian house prices do city by city from now through till the end of this year, through till the end of 2021. Okay, we'll be going through city by city. You can see I've already shared my screen. We'll go for about 10 minutes, sharing a couple of charts and really expanding and unpacking what the predictions could be. So if you're not sure what the next 6 months hold, what the next 4 months hold, then stick around right to the end and I'll be giving you my personal prediction as well. So my name's PK and I help people build passive income using data without using $15,000 buyer's agents every single time. I'm so incredibly grateful for this growing community. We're growing so fast. If you love being part of this community, hit the subscribe button, turn the notification bell on. If you want to get ahead through Australian real estate, then give it a like, and that way you'll get more and more of these types of videos. All right. Let's get into it. So first of all, I want to say that this data comes from Matusik, who's actually, I think, a really insightful commentator. If you don't know him, go check it out. But I've stolen two of his charts just to kind of share my views on them. And this first one, what it shows is the percentage change in median detached house prices. So detached as in not apartments, etc. What is the change between December 2020 and June 2021? So 6 months, and then June 2021 to December 2021. So clearly this is a prediction, whereas this is history. And then the same thing is reflected in terms of percentages. So there's percentage change in median detached house prices, the historical, what has happened, and what is the prediction. And now what he's done really interestingly, I've done videos on this as well, he's proven that there is a causation between housing finance, or the number of pre-approvals on aggregate across Australia. All right, this is data that can be tracked. There is a correlation or a causation between housing finance data and house prices. Okay, so clearly more people get pre-approvals, they get, A-OK from the banks to borrow money. Clearly that has a causation with what house prices do, because there's more demand, right? And so the first thing I want to show you is just some reality, some truth. So in the 6 months ending June 2021, so the June that we just had, house prices on average across all capital cities, actually all of Australia, grew by $99,250. So basically $100,000 growth. And what Matusik is predicting is that house prices will grow by $210,000 on average in the 6 months, June to December 2021. Now, the way he's done that is, like I said, based on housing finance data, taking that forward. Now, this really illustrates to you why APRA needs to come in and has come in and said that they will limit debt to income ratios. If you don't know what that's all about, if you don't know how that's going to make an impact or not, then check this video out that I just did. My last video was all about how borrowing capacity in some select markets and to some select people could be significantly impacted by what APRA, the Australian Prudential Regulatory Authority, is just doing. But these numbers were released before that. And this really goes to show, I mean, $100,000 in 6 months is huge. Double that, that's really unsustainable, right? 12% growth historically between December of last year and June this year, 6 months. And based on housing data going forward, housing finance data, that was going to almost double to 23%. And now you can see why APRA needed to do what they are doing. But the key takeaway I want everyone to take away from this video is that even with housing finance data, probably starting to, that it's not going to be that exponential trend anymore, because APRA have come in and just tightened up, the ability for people to borrow just a little bit. It's not that they've clamped down on it. It's not that they've said no more borrowing. It's not that they've said banks, you can't borrow to investors more than 30% of your loan book, or you can't increase your borrowing to investors 10% per annum. They've not said any of that. It's just people who are overstretching themselves, buying perhaps these $2 million, $3 million properties in Sydney or Melbourne or what have you. It's those people who are going to be the most impacted. All right. But the key takeaway here is that these numbers, especially these predictive numbers, were so astronomical that even with APRA, toning the borrowing capacity down a bit, it's not like the housing market is going to come down, right? So if you're sort of still thinking, look, there's got to be something, that brings this housing market down. You can't go from a 23% prediction of house price growth to all of a sudden negative 10%. You can't have that 30% swing just based on APRA saying we will limit, debt to income ratios to 6x or, six times the debt to income ratio. We're going to limit that. Because remember, when investors buy properties, their income increases as well. It's not just their household income that's being determined in the serviceability calculators, it's also the rental income that comes from their properties. So it's not like if you have an income of $100,000, you can only borrow up to $600,000. That's not how it works, right? So the key point is, this 23%, it's probably not going to be 23%. I don't want anyone to think that that's my prediction, that it's going to grow by 23% in the next 6 months. I think it's going to be more like 10% and 12%. If you go back 3 or 4 months, I did a video on how I thought the overall calendar year calendar year 21 was going to grow by about 20 to 20%. 20 to 25%. So I still hold that to be true. So I think this figure will be more like 10 to 12, maybe 13%. It will basically halve because of what APRA's done, but definitely won't go backwards. Guys, I'm going to share with you a next chart. If you're getting value with this, hit subscribe, turn notification bell on. Please, please, please hit the like button so these types of videos go to more people. And you can really see here the markets that pre-APRA involvement were just going ballistic based on housing finance data, real data, right? This is tried and tested 10, 20 year, coefficient that, basically Matusik has pulled forth to predict what house prices will do. 26% in Melbourne. I don't think that's going to happen. Melbourne has some pretty serious issues in terms of their economy, in terms of vacancy rates, especially Western Melbourne, everywhere that people are going mad after, 400 square meter blocks. I think that's a really terrible investment right now. Sydney was a little bit more sustainable. Brisbane, coming off a low base, I think Brisbane is really the one that's going to have the most upside in the next 12 months, 18 months, 24 months. Similar with Adelaide. I think Adelaide and Brisbane, if you had to ask me which capital city should you be buying in, I would definitely not say Sydney, Melbourne. I would be saying, more affordable, positive cash flow, Brisbane, Adelaide, maybe even Perth. Check this out. Everyone's so bearish on Perth. Everyone thinks that Perth, with iron ore prices the way that they are, super volatile, that's never going to grow. It's not that Perth is never going to grow. You can see that the number of pre-approvals, the amount of strength in the housing finance data for Perth really did suggest that it was just going to go through the roof. And although with APRA doing its thing, that's probably not going to be 68%, I still think house prices in Perth are going to go a long way up. Canberra, a lot of strength, but that will tone down with the debt to income ratio limits being in place. Hobart, it keeps bucking the trend. I think that's going to be sub 20. And Darwin, I really think that's going to go backwards in terms of its level of growth. Still growing, but not by 19%. I think it'll be much less than that. So overall, I think Australia will grow by probably another 10 to 15%, something like that in the next 6 months. Now let's check this second table out. This is just absolute median value. So median detached house values. So before we were talking about the percentage change and the dollar change. Here's what house prices look like in December last year, in June this year, and the predictive methodology that Matusik is using. So let's check out Sydney. So December 2021, Sydney house prices 1.2 million. They grew in 6 months by $200,000. He thinks that they're going to grow another $200,000. I think it's going to grow definitely, probably not that much. Melbourne, $940,000 in December last year, grew by almost $100,000. He reckons another $200,000. I don't think so. Now with APRA coming in, debt to income ratios being affected, house prices in Melbourne so unaffordable, especially even the western suburbs, where all the Lots of different types of multicultural communities really are attracted to those western suburbs out towards Melton. I really don't think that they're going to perform that as well as people think. And I think that's, it may not even grow at all. Probably will, maybe $50,000, something like that. Brisbane is where I think there's the most potential. 570, that's really affordable. Grew by about 50,000. I think that even with the debt to income ratio, I think that's not unrealistic prediction here. I think it will definitely be touching 800,000. Maybe not in 6 months, definitely in 12 months. Adelaide, we've literally bought 300 houses in the last 6 months, or probably 12, 18 months in Adelaide. I think this as a median, it isn't quite right. I think, there have been houses in December that you could have bought for 300 that are now going for 450s, but these are medians. Take it with a grain of salt. I think this is probably going to happen in terms of this prediction, or close to it. Perth, this is the hard one. Hasn't really grown, as you can see, $15,000 in 6 months. I really don't think it's going to be 848, but I probably would say, iron ore prices really kind of coming down. That sentiment isn't really working in its favor for Perth. People were just thinking about Perth. Now iron prices came down. I think it's going to be more like 550, 600, something like that. Potentially Canberra, it's going gangbusters. I think we'll continue going gangbusters, probably not to the tune of 1.3, more like $1 million or something like that, because APRA has come in. You can just see how things were getting out of control. Canberra house prices 830 in 8 months, in 6 months time they were going to go up, according to that regression analysis, by $500,000. That's how crazy it was. That's why APRA needed to come in. But that does not mean that all of a sudden Canberra's going to go backwards, right? Anyone who thinks that doesn't really understand the data. I implore you, understand where these numbers are coming from. I don't agree with them. I think they're optimistic, but I definitely don't think prices are going backwards. Hobart, probably going to be touching 700. And Darwin, it's had a really good day in the sun over the last 12 months, but the data, in fact, for most suburbs in Darwin, the data isn't actually that strong. A lot of this, increase in value is becoming because of macro factors, interest rates, availability of debt, people having great savings rate because they have nothing else to do. But I really don't think that Darwin's going to see 710 anytime soon. So overall, Australia median value was 825, and in 6 months time it became 925, so $100,000 growth basically. I think that $100,000 is going to happen again, right? So I think that 925 will become $1 million 25 by the end of December. I don't think it will be more than 1.1. But what I also don't think it will be is less than 925. So if you're still on the sidelines, still thinking, is this the right time? It's so hot, so hard to buy a property. Let me wait 6 months. Let me wait 12 months to let it market cool down. Then I'll be more intelligent while all these people are getting sucked in because of FOMO. I'm going to wait. I'm going to dive in at the exact right time when the market's cooled down, and then magically it's going to go up. Guys, of course, I'm not, a magician or anything like that, but the data is so strong, not just housing finance, but across the board, that, these prices aren't going backwards anytime soon. In fact, I don't think for the next 3 years, prices will go backwards. Tell me if you agree or disagree, but if you want me to prove that using more data in future videos, just like I have in previous videos, leave a yes below. Guys, there's probably about 200 videos on this channel right now. Probably about 15 of them over the last 3 months have been dedicated to predicting house prices. Not a magician, but go through them so you can really build up your knowledge. Don't just go by your friends and family. Don't go by the media. That is how you live with regret, saying that I could have bought a property and made money, but I didn't. There's so many people that live in regrets because over the last 10 years, at some point, they thought prices are coming down. Don't be one of them. You're welcome to disagree with me, but at least do yourself a favor and become educated. Whether it's with me or someone else, go through those videos. They're free of cost. Really build up your knowledge, guys. Okay, just go through the channel. This channel exists to help you get ahead in property investing just using data. Guys, if you want to step up your learning, check out the links below. My podcast, my Facebook group with almost 10,000 people now, and also my website to really step it up. Guys, always remember the most important real estate is between your 2 ears. I wish you all the very best. My name's PK. Take it easy.